In Module 1, we were painting the story of mobile money, the growth of how mobile money appeared and was developed. And what I'd like to do now is to take you through the various steps that it experienced and ask the key question: what is the relevance or equivalence to health, and how does it influence the potential development of mHealth? For instance, mHealth is really struggling to go to scale in many countries, and yet we've seen that rapid growth of Mpesa within the 3 years. How can we replicate that type of scale, that growth? Is it possible to replicate? And what are the factors that might inform it? So in this module, I'd like to talk about two particular things. One is the agnostic research that I mentioned, and the other is the policy framework, the enabling framework that enabled that proposition to go forward. I think it's really important that any activity we undertake in mHealth, or as in the case of mMoney, or in fact mAgriculture, mEducation, or anything, it needs to be grounded in the existing behaviour of consumers and build on their understanding and their demand for their livelihoods. So in this case, the story very much started by identifying something which not everybody was aware of, that Africa was a multi-spatial household, and that members of the household would travel and find work in other places. This made remittances really important. People were not particularly aware of the challenges that people were having in sending money home. There were a few studies, but there were a limited number that actually drew attention to domestic remittances pre-2003. So I'd like to start with the research aspect, the value of that agnostic investigation into how people are actually behaving. So having said that people were not particularly aware of domestic remittances, there were also international remittances were not yet on the agenda till about 2001, 2002. International remittances at that time were about $120 billion flowing from the global north to the global south. To put that in context, the total overseas aid in 2001 was 60 to 70 billion. So actually the elevator pitch that the researchers used with the politicians was to say that the rich supporting the poor is 60 billion, the poor supporting the poor is 120 billion. And the average transaction cost globally for sending international remittances at that time was 12%. If you wanted to send $100 from the UK to Kenya, it would cost $27 to send it, because the smaller the amount of money, the higher the equivalent transaction cost. So there was great limitation and unfairness in this whole transaction cost internationally as well as domestically. So when we're looking at behaviours, we're seeing that people really want to transfer money, but there just isn't there aren't the mechanisms for them to do that safely and cost effectively. That informs what the money transfer system has to look like. There's no point in creating the money transfer system if that's going to have a large transaction cost. If it would actually be cheaper to put it on the bus and take the risk than it would be to send via the mobile phone, that wouldn't work. And in fact, in Kenya, we can see that happening, because at the same time Mpesa started, which actually created the right price point, there was a startup by Zain Telecom. Zain has since been bought out by Airtel. And they also had a mobile money proposition, but they priced it too high and it never gained traction. Here we are in 2015, nobody even remembers it. So the research was about finding out what's important to people and what they are doing in their current lives, and then asking the question, how could mobile enhance this? Sometimes it was already enhancing it by just a voice call, and it was the ability to phone somebody and say, I need remittances. But then there's that added value that comes from actually being able to transfer through the mobile money, not to have to queue at the bank, not to have to take the risk of the bus. So what's the equivalent for health, and what behaviours are happening within the health arena that could be enhanced by an mHealth application? The other aspect we want to draw attention to in this module is the policy framework. I've already explained within the story that existing banking regulations seem to prevent the possibilities of telecoms operating a mobile money transfer operation. If you're a bank, you have to put a huge amount of money on deposit so that your savers and investors are secure, and you have to get a special license. So for instance, down in South Africa, only 4 banks are allowed, and a new bank is just not allowed to start up. In Kenya, they asked the question from the point of view of risk, what this meant for the consumer, whether it would open up the possibilities of money laundering, open up the possibilities of terrorist funding. They asked also what it meant for the consumer in terms of whether their own money was at risk. There were a whole portfolio of risk propositions. Then the experts discussed, and people who actually knew what they were talking about, such as the head of the Financial Services Authority in the UK, they discussed it with the central banks of Kenya and other countries. So what is the role of policy in terms of health? If a new proposition comes forward in terms of mHealth, what is the risk to the consumer? Is it going to be hijacked by the pharmaceutical companies? Is it going to be giving confusing information if it's an information delivery service? Who actually regulates and makes sure that the consumer is protected in the information they are given? If it's something more simple like adherence, so it's about making doctor's appointments or taking your pills on time, then maybe less regulation is required. But somebody needs to systematically look at the protection of the consumers in the health system, and it's not acceptable to just start an mHealth proposition and hope for the best. The other element in this module is to look at these policy frameworks. It's important that there's an enabling environment for these new propositions. And often in innovation, something comes up which is not the same as what already exists. In this case, banks were very established. The whole banking establishment was there, and there are very clear rules and guidelines. Those guidelines are there to protect the customer, but they also create a situation where new players cannot come easily into the fray. So the whole idea of a telecom, these fly-by-night private sectors that come in and build, networks overnight and establish a multi-million-dollar business overnight, can they be trusted with people's money in the same way that a good, solid, steady bank can? Can you really trust putting money in and out of a little kiosk that's just a shack with a couple of steel sheet walls compared to a bank with good, solid brick and mortar where you have to queue for about 3 hours to get your money in and out? So how do we respond to these questions about business as usual? And in fact, the banks were very against the proposition. There were discussions as to whether it should be a bank-led proposition or a telecom-led proposition. And in the case of Mpesa, as I said in the story, they found a space in the existing regulations where money transfer could be operated by a non-bank as long as it was protecting the customer in a suitable way. So actually Mpesa is a trust fund, and all money that goes through Mpesa goes into that fund, which is completely separate from Safaricom the business. That money is not allowed to be used for mortgages, factoring, leveraging, all those things that created the banking crisis. It's actually protected, and in theory, if you closed Mpesa on any single day, everybody would be able to get all their money out. It's not invested elsewhere. And that was very important for protecting the customer. There were also things like complaint resolution, so customers needed to know if they accidentally sent money to the wrong number, they needed to be able to get it back. This is about protecting the customers, and banks do that by introducing things called Know Your Customers. When you create a bank account, you have to give a physical address. But most people in Africa don't have a physical address. So how are they supposed to sign up for these rules and regulations that banks apply? So to put this in context, As I said in the story, in fact, we created a new Know Your Customer level of inquiry, which didn't need a physical address. And that enabled people to sign up for the Mpesa proposition without the usual requirements that a bank would have. Indeed, just to say that the banks were very upset by this, and once Mpesa was up and running, they asked the central bank to have to implement an audit to try and shake the confidence in Mpesa. Actually, the audit found that Mpesa was very safe and very secure, and then the central bank took out whole-page adverts in newspapers saying what they had found, and so the rise of Mpesa continued. So what's the equivalent in health? First of all, the health system has established players, but at the same time there are new players emerging. If we go to a country like Bangladesh, we have all sorts of levels of health providers, some of which are formally trained and some of which are informally trained. There is space for new opportunities which could be spotted by mHealth propositions. But the central lesson from the mobile money story is that customers and users need to be protected. It's not reasonable to start a new mHealth proposition that might confuse or even harm somebody's health. So it depends on trust. Who are the messages in mHealth coming from? Are they coming from an establishment? Are they coming from the equivalent of banks? Or are people trusting new operators? Are these telecoms providing them with reliable information?